Thank you very much, Madam Chair, and thanks to you and Ranking Member Boozman and others for your leadership on such an important issue. These cryptocurrencies and digital commodities are relatively new, but basic consumer and investor protections are not. They are still the pillars of a sound financial system. And I'm glad to see bicameral and bipartisan work taking place on this. As Senator Booker has already pointed out, it's difficult to overstate the urgency. But the questions that I will ask when evaluating any potential legislation are, will this bill better protect families and investors in Georgia and across our country? Will it help grow our economy? And all of that with respect to all of the geopolitical challenges that we face. And basically, will it help prevent folks from being taken advantage of? Will we be effective? Is it effective? Or will we just be able to check the box and say we did something? So, Chair Benham, critics of proposals to expand the CFTC's authority into regulating certain cryptocurrencies note that as a financial regulator, the CFTC has not needed to focus on protecting retail investors, and the Commission lacks the staff experience and the expertise to properly protect consumers. And so around this question of whether what we do will be effective, what can you say to reassure critics that the CFTC is up to this task that we all agree is so very important?
Thanks, Senator Warnock. I'm going to go back to something that I think I've said because it is extremely important, I think very responsive to your question. There is, in fact, what I believe is a misnomer, a mischaracterization of what the CFTC's constituency is. It certainly is large commercial end users, farmers, ranchers, energy providers. It certainly is large financial institutions. But we do have, and have had for a number of years with a sort of growing demand, a fairly large retail investor community. They invest in futures, which are our main bread and butter contract, and also Senator Tupperville mentioned event contracts, a very retail-oriented marketplace. So from a regulated market, we do see a lot of retail investors, and we see that growing. We see growing investor demand and enthusiasm for all types of financial contracts, something I know that this committee should care about very deeply. The second element that I think really is more responsive is around enforcement, and I mentioned this earlier. If you look at our enforcement docket historically, not just in the past year, 2 years, 5 years, but historically, the fraud cases that the CFTC brings are very much related and oriented towards retail fraud. A significant amount of the fraud, as opposed to manipulation of markets, are oriented towards retail investors. And that's because they involve something that's called Forex, foreign exchange, and also physical commodity fraud, which is typically gold and silver, so metals. And you see this in commercials and other types of advertisements. So if you look at our enforcement docket around fraud, it is very much mom and pop, Ponzi scheme, pump and dump fraud that has occurred for decades in financial markets. And because of that record, we have actually built a very robust and deep Office of Customer Education and Outreach, and a vast network of partners at the local and state and federal level in terms of law enforcement to get, and I'll reference what Senator Fisher said, sort of boots on the ground at the local level. So I don't want to dismiss. I mean, we will have work to do. This is a new market. We will have to build up with resources and personnel. But what I do want to just recharacterize is this notion, this fallacy that we are not a retail-oriented regulator. We have a big history on the enforcement side, and we have a growing constituency on the investment side. And I think we can build off of both to be successful in the digital asset space.
Sure. And one of the things that will have to be addressed in any legislation that's proposed, because there are multiple financial regulators involved, is the dividing line between what the SEC should regulate versus the CFTC. And that's something that we'll be taking a look at. But with respect to this issue of capacity to do what we're asking you to do, you requested $399 million for the CFTC's fiscal year 2025 budget. That funding level would support 725 full-time staffers to effectively operate and support the agency in fulfilling its mission. Comparatively, the SEC requested 2.5, almost $2.6 billion for 5,703 full-time staffers. Is this budget request sufficient for the commission to take on the potential new role of protecting consumers and investors who are trading digital assets? And if not, what funds and staff levels are necessary?
Thanks, Senator. So as it stands, that budget request, the 399 for 725 FTE, is specifically for our existing required and mandated regulatory responsibilities. So not digital assets. This is for futures, options, and swaps. We have done a fair amount of analysis, happy to share it with you, that if we were to see legislation passed that would create authority for the CFTC to police digital assets, we would have an additional budget request around certainly resources for personnel and for security hardware, IT hardware, cyber hardware. So we've been thinking about it, but certainly it would be above the 399, which you would expect to be commensurate with the requirements that Congress applies to us.
Well, thank you. We look forward to seeing that analysis and what is necessary as we move forward.
Happy to.
Thank you.
Thank you.
Thank you very much. Senator Marshall.
Thank you, Madam Chair. Chairman, welcome back